Get in Shantanu Dasgupta as promised before the break. He joins us right now on the show. Mr. Dasgupta, good having you. Thanks so much for joining in. The broad consensus, if we look at the IP numbers as well, seems to be that consumer durable sales are very close to or at 7-year lows. After a rather disappointing quarter 2, broadly, how has quarter 3 been for you?
Well, October started off very well, but all the gains that we saw in October kind of vanished in November and December. The last 2 months have been particularly bad in terms of demand. In an overall sense, I think the IIP more or less reflects what the demand situation has been for our industry over the last actually 24 months. But I think if I have to describe 2013, the calendar year 2013, I think we've never seen demand pressures as high as we've seen in 2013.
Right, Mr. Dasgupta, we'll just come to you in a second. So I just want to address one more stock which has seen volume burst. We've already highlighted that, but Adani Enterprises in the volume chart, the candlestick chart actually will reflect the kind of move that we're seeing on that counter. 238 volume and price breakout seen there. That's about 1.25% move up for Adani Enterprises. Just wanted a quick word, Mr. Dasgupta, on the kind of raw material costs, the rise that you're seeing out there as a percentage of sales on a comparative basis. How much pressure is coming in on that side, onto your margins?
Well, if you look at the kind of prices that prevailed in a year ago, in January of 2013, and what they are now, consumer prices have gone up for our products by about approximately 7 to 7.5%. Now, not all of that is because of commodities. Part of it is also because of currency. This time last year, currency, the dollar exchange was, I think, in the region of about 55 rupees. It's now 62. So, the latter half of 2013 calendar year saw, the dollar going up, as a result of which commodity prices did go up for the extent to which those are imported. But in an overall sense, currency plus commodity and other inflationary pressures have resulted in prices going up for consumers wanting to buy a refrigerator or a washing machine by approximately 7 to 8% between January last year and January this year, the point to point.
So, well, in that case, what kind of margins do you think we can see for quarter 3, quarter 4, which will be the second half? And how do you expect things to shape up, say, over the course of the first half of the next fiscal?
As I stand, as I speak to you today, which is sort of almost in the middle of January, having 2 weeks of the new year behind us, we're seeing a little bit of a positive trend with versus the same period last year. So there is some underlying growth that we're seeing, and we hope that momentum will continue. But irrespective of the fact, whether there is, the environment is helpful or not, we at Whirlpool feel a little bit more confident about our own performance going ahead, and that's primarily because of a whole slew of new products that we will be launching in this quarter and next. So, if you look at our refrigerator range, single door and as well as double door, from entry level right up to the more, premium products are all going through a serious revamp. There'll be a lot of new offerings, a lot of new attractive finishes. So whether from a performance point of view or from a design and aesthetics point of view, we're going to have a whole host of new products at very attractive prices. So that by itself gives us a lot of confidence to be able to gain share, even if the market doesn't grow. So in summary, as I said, that the environment may not be very helpful. We don't see any green shoots in the economy that is going to suggest a reversal of trends or fortunes. But from our own point of view, knowing what is on the anvil, we feel a little bit confident about the next couple of quarters.
Wouldn't having to launch new products require an ad spend which will be higher than what you've done in the past couple of quarters, and would that dent the operational performance?
Well, we have one new execution in terms of our advertising being planned for a refrigerator range. Advertising, is something that is in our control. If we see, growth coming back, we can always spend a little bit more. But as of now, we're holding on to our 2013 calendar year spends. We haven't, at least for the first half of calendar year 2014, our current budget is to remain pretty much at the levels at which we spent last year. But as I said, that if we see sort of growth reviving, then there is no reason why we can't put in more. But advertising is not the only thing. I think product assumes a much greater role in our kind of industry. People wanting to buy a refrigerator will ultimately enter a store. They usually have 2 or 3 brands in their consideration set. For appliances, Whirlpool is certainly one of those 3 brands. And when they go around looking at the products that they have within their budget, I'm pretty certain that the kind of offerings that we will place in the market over the next 3 months will attract them to choose Whirlpool as their brand.
Fair enough. But just from a stock price perspective, given what the listed entity is doing right now, you're a debt-free company, but you're looking at increasing your cash flows. Your cash balance stands at about 155 crores. Does that increase the probability of you sharing that cash with your investors in terms of a special dividend?
That's a question that I think the board of directors will address when they meet. I wouldn't like to answer that question, but it has been asked of me in different forums and indeed to my managing director. But let's put that aside. I think we do take pride in the fact that we've been able to remain debt-free. We generate a reasonably good amount of cash from operations. Our working capital is, well managed. I think, we're having to face things that are quite beyond our control, but what we do control, I think we do reasonably well, whether it's on managing our innovation funnel, whether it's managing cost, and which is managing working capital. All of that is some of the good things will certainly continue. And as I said, some of the investment we made in capital, in capex, to the extent of about 80 crores last year, is going to be seen in the shape of new products rolling out from this quarter onwards.